Welcome back everyone to video number 3 in this series where we're covering pretty in-depth here with business pro formas and how to fill them out, how to make sure that we're identifying everything that our company requires just to stay in business on a monthly basis. As you recall, we started off with business drivers. That's kind of our identifying our revenue streams and what we're selling, who we're selling it to. Then we covered our marketing expenses and advertising dollars that we're spending just to get in front of the right eyeballs. Then we moved into operational costs. These are things that we identify on a monthly basis just to keep the doors open, keep the lights on. What do we need to operate our business day to day, month to month? And then HR costs. Those are the costs we are incurring to pay all of our people on a monthly basis, and we're identifying the monthly strain on our cash flow from each of our salaried staff or hourly staff. And we're calculating that based on an annual amount, which gets broken down into a monthly amount, and that is our roadmap that says we have to drive at least this amount of money from we have to drive at least this amount of money to cover these expenses. Now, similar to in the CapEx tab here, so you'll see in this section here we have quantity and unit amount. That probably looks pretty similar to the marketing and advertising expense tab here that we had. As you recall, we broke these down and itemized it so that we could identify where the best places are to allocate our resources for the highest return on investment. We're doing the same exact thing for the capital expenditure tab here as well. The difference between a capital expenditure and any of these other types of costs is these are usually one-off costs that maybe we're incurring every 3 years, and maybe it's not every year but every 3, 4, 5 years. And so we do need to account for it on a total unit amount and then a unit price, so that again we can look at our business and determine where are the biggest needs and how do we allocate resources in a way that gives us the most bang for our dollar or the highest return on that equipment. So as you can probably see here, this is where we're paying for equipment. We're paying for things that allow us to complete our job on a daily basis. So, for example, let's say at the end of the year you need to hire 5 new people, but you don't have any more desks, chairs, or computers. And so, in that case, you would need to buy at least 5 new desks, 5 new chairs, and 5 new computers, and list those in this capital expenditure tab. The total amount, the unit price per mount, and identify that total. Again here, I'm going to go through each of these briefly so that you can see those formulas are a calculation or a representation of our total unit amount times the unit price, giving us that total. And then we lead into our sum of those total capital expenditures. Now this would be this is more equipment, as you can see, and then this is more of kind of like soft costs. We have digital assets, user interface, and customer experience type of resources here that we're identifying, again, on a per unit and unit price calculation. And another capital expenditure here is you see a leasehold improvement. I don't have anything plugged in here, but again, this is kind of case-by-case basis. These are going to change based on your industry and your business. So let's wrap up the expenses here and go into the use of proceeds tab. And again, I'm going to point it out every time just so that you can continue to be familiar with how these formulas are built, where they are, and the significance of only updating dates here in this business drivers tab. Let this be your driver. Don't change any of the dates here or here. Why? Because we have that tab speaking to us. So What you're looking at right now, let me give you a full picture so that you can see what we're looking at here as a whole. This is kind of a summation of all of the expenses we just identified. So again, we identified marketing and advertising dollars that we're spending to get in front of the right eyes. Then we identified everything that it costs us to operate on a monthly basis. Then we identified all of the people we need to pay on a monthly basis to stay in business and complete everything that needs completed. And then we identified the capital expenditures that we need for our people to use to operate our business and to do so effectively. Now this is the summation of all of those funds. So all of those funds on a monthly basis. So we're putting it all together here in this tab. So cash paid out. So this is cash that we are accounting for and making sure that we have enough cash on hand to cover these expenses. And again, this is telling us how much money we need to drive through that business and set aside to cover everything that we should anticipate. Again, all surmise, or a summation in this column right here, broken down by month. Okay, I'm going to cut it here because I want to draw a distinction, or I want to have a clear divide between all of the expenses and use of proceeds, and how we're using or identifying the expenses and how we are allocating funds to cover those expenses. Because next we're going to get into the growth tab and the cash flow tab, and that will show us, oh wow, this is the per unit unit sales that we need just to cover all of these expenses that we found. And then I'll show you kind of the cash flow tab and how those numbers change, and I'll show you how we can manipulate the numbers, manipulate the sale price, so that we can create offers that meet our customers' expectations and make us competitive in the marketplace. So I'll see you in the fourth video, where we get into the growth tab and the cash flow tab and really tie it all together here at the end. I'll see you over there.